Welcome back to Algobot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host here at Algobot, and in today's lesson we're studying an expert advisor called Pivot Engulfing Recovery. This is a pure price action system, with no traditional indicators at all. Instead, it maps market structure with confirmed swing pivots and trades engulfing candles against those levels, then manages risk with a volume-weighted recovery hedge. By the end, you'll understand how it finds setups, how it sizes stops and targets, and how its basket logic works. Remember, this is educational content only. Let's start with the big picture. Pivot Engulfing Recovery is an expert advisor built entirely around price action. That means it doesn't rely on moving averages, oscillators, or any classic indicator. Everything it does comes straight from the candles themselves. The foundation is market structure. The strategy continuously scans for swing pivots. These are fractal turning points, a high that stands above a set number of bars on both sides, or a low that sits below its neighbors. The number of bars to the left and right is controlled by the PivotLeft and PivotRight inputs, both set to 3 by default. A confirmed pivot gives the strategy a genuine support or resistance level derived from price alone. Against those levels, the strategy watches for engulfing candles. An engulfing candle is one whose body fully covers the previous candle's body in the opposite direction. The approach studies two distinct edges. The first is a reversal, a bullish engulfing that dips into and reclaims a swing low signals along, while a bearish engulfing that pushes into and rejects a swing high signals a short. The second is a breakout, a strong-bodied engulfing that closes decisively beyond a swing level signals continuation in that direction. To size its trades, the strategy uses a simple range proxy, the average bar range over the recent window set by RangePeriod, which defaults to 14. Stops and targets are multiples of that range, so the strategy adapts to current volatility. Finally, there's the recovery hedge, the part that gives the strategy its name. If a position runs adverse, a larger opposite position can be opened so the combined book leans with the prevailing move, and the whole basket is then managed to a bounded exit. This style suits traders who want to study structure-based automation. As always, this is educational information, not financial advice, and trading carries real risk of loss. Now let's walk through the mechanics step by step. On every new bar, the strategy first updates its swing pivots. It takes a candidate bar sitting PivotRight bars back and checks whether it is the strict extreme compared with the older bars to its left and the newer bars to its right. If the candidate's high is above all of them, it becomes the active swing high. If its low is below all of them, it becomes the active swing low. This streaming check keeps the support and resistance levels current as the market evolves. Next, the strategy measures volatility with the range proxy, the average of each bar's high minus low over the last 14 bars. From that single number, it derives a tolerance zone, set by ZoneFrac at 1/2 of the range by default. The zone gives the engulfing patterns a little breathing room around the exact pivot price. Then it evaluates the most recently closed candle and the one before it for an engulfing pattern. For a reversal long, a bullish engulfing must form with its low reaching down into the swing low plus the zone, price sweeping the level and reclaiming it. The short reversal is the mirror at the swing high. For a breakout long, a bullish engulfing must also be strong, meaning its body is at least half its total range, and it must close above the swing high plus the zone. The short breakout mirrors below the swing low. If both a long and a short would qualify on the same bar, the strategy stands aside rather than guess. When a signal is valid, the strategy opens a single primary position. The stop loss is placed at 1.5 times the range, and the take profit at 1.2 times the range, both scaled from that same volatility proxy. If that primary position runs adverse by 1 full range, the HedgeTrigger, the strategy opens a larger opposite leg at twice the size, removes the scalp stops, and hands control to a volume-weighted break-even on the whole basket. The basket is then closed once price clears break-even by the recovered distance, or, if it runs to the maximum adverse distance, a disaster stop that keeps risk bounded with no martingale stacking. That is the full cycle, from structure to signal to managed exit. Let's look at the actual MetaQuotes language code that runs in MetaTrader 5. At the top are the input parameters you can adjust in the Expert Advisor settings. PivotLeft and PivotRight, both 3, define how many bars frame a swing pivot. Range period of 14 sets the volatility window. Zone frac of 0.5 is the tolerance zone around each level. SL range multiple and TP range multiple, 1.5 and 1.2, scale the stop and the target. HedgeTrigger and HedgeMult govern the recovery leg, and lot sets the base position size. Below the inputs, you can see the signal block, and notice it covers both sides symmetrically. Rev long is true when a bullish engulfing forms, and the signal bar's low reaches into the swing low plus the zone. Rev short is its mirror at the swing high. BRK long adds the strong body and break of structure conditions above the swing high, and BRK short mirrors below the swing low. The strategy combines these into go long and go short. When go long is true, it calls open trade with the long flag, passing the stop and target distances. When go short is true, it calls open trade with the short flag instead. Inside open trade, the buy side reads the ask price, places the stop below entry and the target above, and calls trade.buy. The sell side reads the bid, places the stop above entry and the target below, and calls trade.sell. So each side is a clean mirror of the other, with stops and targets sized from the same range proxy. That symmetry is what lets the strategy treat long and short opportunities even-handedly. Let's bring this to life on the chart. What you're looking at is an illustrative Eurus sequence that demonstrates both a long and a short trade, exactly the way Pivot Engulfing Recovery would read them. Notice there's no subpanel oscillator here, because this is a pure price action strategy. The only reference lines are the swing levels the strategy draws from structure itself. Start on the left. Over the first few candles, price is drifting lower in a series of red, bearish bars. Below them sits a horizontal line marked prior swing low at 1.0832. That level was confirmed earlier as a fractal low, a bar whose low sat beneath its neighbors on both sides, so the strategy treats it as meaningful support. Watch the third candle in our setup. The bar just before it is bearish, continuing the slide. Then a strong bullish candle forms whose body completely engulfs that prior bearish body. Crucially, its low dips right down into the swing low at 1.0832, sweeping the level, and then it closes back above it, reclaiming the support. That is the reversal long condition, a bullish engulfing piercing and reclaiming the swing low. You can see the buy entry marker print on that candle. The stop loss is set below at 1.5 times the range proxy, sitting under the swing low, and the take profit is set above at 1.2 times the range. From there, follow the green candles climbing. The market pushes up bar after bar, each one holding above the reclaimed support. Price reaches the take profit target and the long position closes at the upper take profit marker. Notice the strategy isn't trying to capture the whole move. It takes a defined, range-based target and steps aside. Now the second half of the story. Price keeps grinding higher toward the upper reference line, marked prior swing high at 1.0900. That level was confirmed earlier as a fractal high, so it now acts as resistance. The candles approaching it are bullish, and one of them pokes right up near the swing high, as buyers test the ceiling. Then comes the mirror image of our first setup. A bearish candle forms whose body engulfs the prior bullish bar, and its high pushes into the swing high at 1.0900 before price rejects it and closes back down. That is the reversal short condition, a bearish engulfing rejecting the swing high. The sell entry marker prints on that candle. This time the stop loss sits above the swing high at 1.5 times the range, and the take profit is placed below at 1.2 times the range. Follow the red candles down from there. Price rolls over and works lower, candle by candle, away from the rejected resistance. It reaches the downside take profit target, and the short position closes at the second take profit marker. So in one clean sequence, you've seen both engines of this strategy. A swing low plus a bullish engulfing gives the long. A swing high plus a bearish engulfing gives the short. The structure defines where, the engulfing candle defines when, and the range proxy defines how far the stop and target sit. One more thing to keep in mind. If either of these positions had instead run against the entry by a full range after opening, the recovery hedge would have stepped in, opening a larger opposite leg and handing the combined position to that break-even basket logic we discussed earlier, rather than simply sitting in the loss. On the chart, both of our example trades reach their targets cleanly, but in live conditions many do not, and that is exactly why the risk controls exist. Every setup here is an illustration for learning, not a prediction of what any real trade will do. Let's wrap up. Today we studied Pivot Engulfing Recovery, a pure price action expert advisor for MetaTrader 5. We saw how it maps structure with confirmed swing pivots, how it studies both reversal and breakout engulfing setups on each side of the market, how it sizes stops and targets from an average range proxy, and how its volume-weighted recovery hedge aims to keep risk bounded. Everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading involves real risk, and losses do occur. If you found this breakdown helpful, please like the video, subscribe for more MT5 strategy analyses, and leave a comment with the strategy you'd like us to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.